Good day, good morning, good afternoon, good evening, traders, wherever you may be. Welcome to the F.A.C.E show, final one of the week, Friday the 13th. As I mentioned on the Flow show, I hope it's not an unlucky day for all you guys trading. Big event, obviously, today is the US CPI in about 30 minutes, which we'll cover live here on the F.A.C.E as normal. And I've got a couple of, how should I describe these? Ruffians joining me. I see Stelios is in the house, and Nick Grasshopper will be coming along shortly, no doubt. Good morning, Stel.
What did you call me? Ruffians? What?
Ruffians, ragamuffins.
Oh, ragamuffins. Hello, everybody. Hello, Ryan.
Hello, mate. If the name fits, then yeah, you're it. How's it going, mate?
I'm okay. I'm all good and waiting for the weekend. It's been another very long week, that's for sure.
Yeah, Valentine's Day tomorrow. You whining and dining the missus?
I've been married for 12 years, 13 years. We've done enough of whining and dining. No, I'm kidding. I'm kidding. No, we're gonna do something.
Yeah, your missus will have your nuts in a sling if you don't do something.
Yeah, true. What about you? Anything planned?
Yeah, I've booked a restaurant. I'm longer than you. We're 22, 23 years married. So yeah, usually it's a card on the table and a takeaway. But no, I've decided I'm gonna splash out and
nice.
take
So
to Nando's.
McDonald's
Nando's.
it is, huh?
Candlelit Nando's.
Nando's. Yeah.
No
cool.
expense spared, mate. No expense spared. Anyway, right. Let's put our Valentine's plans aside and get stuck into what's going on. A bit of a quiet morning so far. Just if you Yanks are waking up and eating your cornflakes. Not a big amount of moves going on in markets at the moment. Let's have a look around the grounds. What's going on? Did have a little bit of a wobble in oil. Sources stories saying that OPEC could increase production in April, which came off a few cents, 50, 60 cents, which is not that big a deal for oil markets. If you remember them from the old days, when that would be a simple move and $2, $3 moves were the norm in that one. One thing to bring to your attention, we've got a whole stack of options at 118, 50, 60 today. A very large amount. And if you're in our chat room, you can go to the dashboard, look at the market tab and the orders and options, and you'll see exactly how much is sitting there. But we are really glued to that level again. So we'll have to see what happens with this after the CPI data and before that expiry. Other than that, it's been a bit calm in dollar yen. We've had a 90, 100 pip range today. So it's had its moves about, but just finding a bit more of a balance now after a couple of taps on that low 152s. But the bounce is relatively weak compared to what we've seen in all these sorts of moves. So a bit touch and go as to which way this one goes next. But there are signs of a bit of support coming into those low 152s. Stel, I'm going to bring you in now, mate. Firstly, what are you expecting from CPI? Are we going to see some big numbers, or is it going to be par for the course?
Well, I don't like to make predictions, but I don't see how. Well, we're expecting a drop from 2.7 to 2.5 on CPI, and from 2.6 to 2.5 again on the core CPI. I don't expect any fireworks. I mean, yes, we might get that. Plus or minus 0.1% is not going to do much, I don't think, in the grand scheme of things. So let's see. But the interesting thing is, I don't know if you follow Trueflation, which is another index. Obviously, it's not the official BLS inflation index, but it's an index which is much more high frequency, and it collects a lot more of data which are based on actual transactions. It's something that a lot of people talk about on X and everywhere, and that is showing 0.8% year on year, which is a big difference. So, you have CPI, which is calculated monthly, and it's using data and weightings, which are usually from a year or two before. They're very slow to change these and a much smaller data set, which is not usually from actual transactions. So it's a lot of estimates, and I don't like that. I really don't. So, trueflation is something that changes a lot faster, and I like to monitor that for sure. So let's see how CPI slowly, theoretically converges towards that level. I mean, I don't think it's going to go to 0.8, but you know what I mean. I think the CPI theoretically should be grinding lower month on month, as we go forward. And especially given that one of the main drivers of inflation, which is housing, it's not really not really performing well in the past year or two in the States or anywhere actually for that matter. So let's see how CPI follows. But anyway, so to answer your question in a really long-winded way, I don't think we're going to see any huge surprises. So we react to the number and see what happens. But let me take the screen. And oh, by the way, Fred, 45 years with your wife, man, you're a hero.
Yeah.
Let me take the screen
Yeah.
and go through a few things. Where is it? Here it is. Share, replace current share, desktop one. Here we go. So, unfortunately, for quite a few of the big instruments that I look at, we are at the close but no cigar level. So we're close to actually making a move or a breakout, but it's not actually happened yet. So I'll start with yields, which is the most obvious one. We in the 10-year US, we passed above 420, which was a pretty big level for the past year and a half. We got to this trend line resistance and right back down. So this is quite frustrating for people who want to see an actual move happening. So we're still coiling, but this is actually shrinking quite fast now. So eventually there's going to be a decision made. And again, I'm going to continue with what I've been saying for months now. I think this will result to the downside. But obviously, let's see what happens. New Fed chair is going to be theoretically going to be dovish with rates on at least on the overnight, the Fed funds rate. What happens further out is a different story, and it's a lot more down to markets. Of course, the central banks do have the power to buy everything, so they can affect the 10-year rate as well. But let's see what happens. But the yields, still trapped, and it's similar thing with 10-year gilts, which there's a million reasons for gilt yields to be higher. Who was it today? Pale said that rates are a little bit lower than they should be. So and
I don't know what
there's
he
a
was
lot of
smoking.
yeah, I don't know either, but there's a lot of reasons for yields to be higher. The debt problem, more, the deficit, everything, more debt issued, more supply, and yet yields are not really rising. So, and if you ask me, what do I think happens with this chart? I think we go lower. So, but one step at a time. I think yields are going to resolve lower, but for now we're just going sideways, and that has an effect on many markets. We've seen last couple of days equity markets having a little bit of a wobble, but as always, if you zoom out, this doesn't look in any way bearish yet. I want to see a breakdown below this, below theoretically 6,500. If you get below 6,500, you take out the lows before, you take out the 200 DMA, which is important. So that for me is going to be a big signal. And it's not that far away. It's 300 points. So it's what, 5%. What is that? Yeah. So it's not a million miles away. So, but until that happens, or if that happens, but until then, I don't see any reason why I should change my view on equities, which is that they are not bearish and they're just consolidating sideways. And if yields do go lower, you know what happens there. Yields up, stocks up. Sorry, yields down, stocks up. So that's going to be support for equities. For now, we're seeing a little bit of a wobble, but nothing really to say. Again, another case of close but no cigar yet. Similar story with oil. again, many reasons for oil to be moving higher, all this Iran story and this and that, and yet oil is really struggling to go above this big zone that we have been talking about for a couple of years now. So again, I don't see anything happening right now. We have to break above this trend line above 70 or take out the lows here. So again, we're just consolidating sideways and having a pretty interesting daily chop, but nothing really to change the big picture yet. In currencies, we have the dollar, which is also, unfortunately, it's moving sideways broadly, from between 95 to 100. So yes, there is a trend to go lower, a very gradual one, but I don't have conviction on the dollar either way, unfortunately. I do have a view on a few dollar pairs, like I had for dollar mex, which I had been bearish for a while. Now that I think is mostly done, this move, so I wouldn't chase this lower. I still like dollar Norway to the downside. It broke, it's testing new lows. I like that a lot. But the euro dollar is a tricky one. The euro dollar broke out above. If I scroll back on this, we broke above and right back below. So could you say that this is a short-term false breakout? It looks like it. So this is probably, if I want to be bearish a dollar, I do it against the NOK. If I want to be bullish a dollar, I'd probably do it against the euro. So you get your pick depending on which way you are inclined. But other than that, not much to say, unfortunately. Hopefully, the CPI today will give us a little bit more of action. We have to talk about Bitcoin and cryptos and metals, so let's do that. For people who are subscribers, they know that I changed my bias on Bitcoin to bearish as we crossed below the 100,000 mark, and that's gone pretty well. And we also talked about this for a couple of months, this sideways bearish flag that looked like it was, and it broke straight away. And I think the target's something like 58K or something like that if you do the projection. But does this look bullish? No, absolutely not. And it has been underperforming stocks and risk assets in a big way. Do I know why? No, I don't. But this is what we're observing in the markets. Do I think it's time to go against this? Well, very difficult to say. But if yields drop and general risk sentiment picks up, then theoretically cryptos should also find some support. But then again, as I said before, the S&P has been going up and sideways, while the Bitcoin has been going sideways and down. So it's very difficult to say that there is now still a correlation between Bitcoin and equities, because there isn't one right now, at least for the past months. So Bitcoin still looks bearish. Ethereum, it's a similar story. Ethereum is getting very close to an important trend line. So around 1550 or so, I think that's going to be a very nice risk reward long down there. But again, cryptos, I have an issue with cryptos, mainly because I don't understand them, but also because it's very difficult to explain their intrinsic value. So is it rich? Is it cheap? Very difficult for me to say. So I'll just leave it at that. Metals
It's funny
definitely
you say
having
that.
a
Sorry, just to jump in. It's funny you say that because literally this morning I was tweeting about something to someone about Twitter. They've changed their display settings, and someone had already created a workaround with a Chrome extension, and someone replied on my post to this bot called BankerBot to create a meme coin, create a coin based on this guy who had created this extension, and literally in seconds there was a coin created and open to trade on this exchange. It's you say you don't understand cryptos, neither do I, but if you can literally tweet a bot and have a coin created in seconds, it's bonkers, mate. It's bonkers world.
Well, the whole thing about crypto is that there's a finite supply, but you can have a million different coins. So I really don't get it. So let's leave it at that. People who are smarter than me, they get it and they make money off it, but I don't.
Yeah.
Anyway, it's something for my daughters to get their teeth stuck into, I guess, when they're older. So if they still exist. So gold.
What, your daughters all coins?
Coins. Oh man. So gold has had also obviously a big wobble, as did silver and the platinum, all the other metals, but it's been trading a lot better than the other metals. I mean, gold is still king, and yes, volatility is there, but we barely managed to hit the 23.6 retracement from this move from 1800 to 5600. It's incredible. And it's now consolidating sideways. Do I think this could go lower? Of course it could. But we have the 50 DMA and that fib converging at around say 4700. If we get there, that's not a bad level to get along. But the main action has been in silver, which is crazy. I got out from my silver longs obviously before the highs, but I managed to ride it for quite a big way, and I'm very happy about that. And now, again, it looks like it's consolidating sideways, but you could see we saw a 10% drop yesterday, which is ridiculous. So, there's a lot of games being played. Has the underlying problem of physical supply deficit and all these issues being solved? Of course not. Does it get solved when this goes from 120 to 78? Of course it doesn't. So there's a lot of games being played, but the underlying issues remain with physical metals. So I think the medium term direction is still higher, and any meaningful dip is going to be a great, great buying opportunity. Personally, I don't have any silver loans at the moment. I have some in platinum. I'll talk about it in a second. But if we do get towards these lows at 64, I'm going to start slowly accumulating, no leverage as usual, and try to accumulate some silver as well slowly. I do have a full position long in platinum. Got a little bit of a FOMO. I'm down a little bit on it, but again, this is unleveraged, and my time horizon is a lot longer than most people. If we ever get to 1735, man, that's going to be an absolute gift, and I'm going to get another. I'm going to double my position and leave it at that. There's a macro thesis behind platinum and palladium. We've talked about this for quite a few times with catalytic converters, etc. So I like that in the medium term. Am I worried about intraday or intra-week fluctuations? Of course, I'm not. I don't have leverage, so I'm not going to get stopped out very quickly. And that's pretty much it. I don't know. Do we have anybody else on board to take a look at
Yeah,
the
Nick's here.
charts?
Nick's here.
Nick, hey, Nicholas.
Hey, how's it going, guys?
Hey,
Very
mate.
good. How are you?
Doing pretty good. That's your comment, Ryan, about someone spinning up a crypto that fast is terrifying. But I
Yeah,
was wondering, did you want one? Because maybe we can figure that out.
I'm already researching it, mate.
Yeah,
The West
yeah,
Ham coin. There must be a West Ham coin.
Oh no,
yeah, exactly.
that'll go negative before it's even launched.
Yeah. Did you want me to grab the screen, Ryan?
Yeah, go ahead, mate. What do you got for us?
Yeah. And still, great job with the silver position. Over the last few years, that was such a crazy move, and all I could think about was Stelios. Um, so I'm just happy you're not full on planning the retirement yet after that crazy move.
Not yet.
Yeah. Well, yeah. So I'll bring some stuff to the table today, talking about equities. I'm going to cover the big indices, and then we'll get into the Mag Sevens, some crypto, and if you guys have any tickers that you want me to take a look at, just go ahead and punch them into the comments. I'm more than happy to take a look. Um, so I'll just go ahead and kick it off with the S&P. So yeah, it's been really interesting to see how long we've really been going sideways. And one of the issues I had initially as a trader was trying to make sense of a range. As a swing trader, I would be trying to take long, short swings in here, and it's really easy to get chewed up. So for me, I would just say, I'm going to step aside and kind of let this play out. And I've seen some comments in the chat room from, I think, Ben saying, this might be a rounding top and some other things like that. I am concerned about this market at the moment. I'll show you some of the stocks kind of under the hood, but one of the main things I'm noticing here when I take a look at the Nasdaq, like this obviously looks like a range too, but it moved down, rejected at the 50% retracement, and these EMAs did cross. And when I take a look at the Mag 7s as a whole, one of the things that I was watching the last few weeks is, okay, I want to see if this level breaks at 62. And this is a ticker that shows all of the Mag 7s together, and it's showing it breaking lower. That's not a good sign because these seven stocks do account for a very large portion of the S&P as a whole. I mean, Nvidia takes a large percentage, so does Apple, and yeah, they're accounting for 35%. So we have to keep an eye on these. One other thing that I noticed too in the Dow was it finally hit 161% extension from the range of the beginning of 2025 to the lows. Went up there and tagged it, and also this false breakout here back into this range is not a great look. One thing that I did learn in this community is that false breakouts can lead to breakdowns. So I'm definitely slightly concerned. Taking a look at the RSP, the equal weighted S&P rising wedge, throw over at the top. I'm going to be watching this 200 level to see if it cracks, but if you start to see the equal weighted crack, that's not the best look. And one of the things that I saw last night was this Hindenburg omen in the past month. And the Hindenburg omens essentially track when majority of stocks are declining. I believe that's the correct way to look at it. They tend to do well in clusters. So you can see here in historically how things can tend to shape out after these readings. They're not the best, the day after we printed this the other week, but what caught my eye was the 1 month to 2 month. We do have midterms this year that can cause decline, so maybe we are due for some type of a pullback. Again, still in this range, so I can't put a fork in it, but I have a lot of friends texting me left and right. Hey, what do you think about the market right now? I'm bailing out of my positions. They're trying to manage their 401ks. They just got into this. I'm around that age, and they're acting really emotional. And yeah, I think if some of this gives way, it could cause a decline. Now, I'm not calling for a full-on collapse, but I would love to see if we could get 6,200 at some point over the next few, I don't know, call it a month or two. Um, I it would get interesting because I think a lot of people would start saying, "Oh, the top's in, blah blah blah," because you do have very outsized moves in the rest of this market. I mean, gold, silver, crypto, dollar, all of it taking such a large beating, and the equities are just sitting here like, I'm okay. Um, but everything else around it is flying. So maybe it's due for some type of a correction like the others. Um, I don't want to see a top in this market. We've been very blessed with volatility the last few years, and I do not want that to come in stride and then disappear. Um, yeah, crazy last 6 years, right? But let's go ahead and dive into some of these bigger tickers. So Meta here, it got down to the trend line, consolidated, broke out of this descending channel and made this spike. Very interesting candle on the daily. Um, I'm looking to see if Meta can break 615 and then I'll get a little bit more interested in it, but uh, I don't have too much of an eyeball on it until more moves come through. Google, though, not the best look. From the lows here in October of 2025, basically this nice stretch higher, we are coming back towards the 38.2 and we're coming back to the 38.2. So it's already been tested. Fell that earnings report, it dropped and then caught some wind and back down. So now that it's retesting this, I would assume that there's a likelihood it breaks 300. We'll have to see what transpires, but yeah, seeing the mags here break support, get out of the mags are out of the range. So I'm interested to see how this work plays out. Amazon really ugly. Amazon did not have the best earnings report, and it saw that large decline. You know, these are serious moves. You know, in the mags, or I'm sorry, in Amazon to come down 9%, bounce back near this range that it was in. You know, rangy broke out back in here. Now it's below it. Tried to test this 618, couldn't get back in here. I don't love this, and it's on that psychological whole number 200. It could definitely hold it. I would be looking for a break back above 212. That would probably be a nice trigger to get long for a brief pop or maybe a sustained pop. That's the thing about this market. So many times the last few years have, you know, it starts to roll over. Everyone thinks they're about to Michael Burry the whole thing, and then next thing you know, we'll be at 7,800. So you gotta be careful. Keep your head on a swivel. It's fun to sink your teeth in, kind of like I am right now, thinking about there's a potential for a decline, but it's important to not get too carried away. Taking a look at Microsoft here, I feel bad for Microsoft holders the last few years. It it remained in this 400 to 450 range for pretty much the entirety of 2024. Started to look horrible, and then really just a crazy run from the lows in May to the highs of August. You're talking 4 months. Microsoft went up 40%, and now it looks like a double top. Moved lower, got into this little triangle here, and eventually broke down. Now it's back in here, and when you see that happen, you have to think about all the people who, maybe they bailed out of their positions and chased back into here, and now that we're back in this range that doomed them since 2024, they might be more likely to bail out of their position. So that level is probably going to be around 380 in Microsoft. That's a level that I think it needs to hold. Now, if it's going to take some shots, maybe it'll find some support closer to this former low here in April. That comes in at about 350 and right near some trendline support. So we can actually go ahead and just put a little support box here and see how that plays out. Apple, ugly move yesterday, down 5%. Pre-markets, it's right near here. But I did like this setup. I thought it was pretty nice. We had the from the lows of April to the highs, pulled back to 38.2 in a falling wedge. These types of setups are a great way to build confluence for a position. I love these daily ranges, daily 38.2s, and you put a really sharp falling wedge on top of that. Really nice technicals laying up there, going into a catalyst like earnings. That's what I, call triple confluence. And great setup. It played out, but it's not looking too great at the moment. It needs to take out this low at 244 to start calling it bearish because it's really not. When you take a look at how far it is from the all-time highs, sure it's down 8%, but it's not looking like Microsoft, right? So Apple's still okay at the moment.
Nick,
Yeah.
Nick, I'm going to jump in, mate, because we got CPI in just over a minute.
Oh,
So
sorry about that. Yeah, go ahead and
no,
take
that's all right. We can grab it back after if you
No, it's
like.
all good.
We'll get over the data and then we'll get back to it. So we've got a minute to go. So yeah, we're expecting 2.5% for headline CPI and the same for the core, which will both be down. Personally, I think there's the possibility, there's a risk that it doesn't come in as soft as expected. So that'll be the shock for the market on top of the jobs data, because that'll be another reason why the Fed doesn't need to cut. But conversely, if it is a soft one and if it's softer than expected, then we're probably going to see yields coming down a bit more, and they're already on that midpoint even after the jobs data. And the dollar is probably going to get a little whack around the chops as well. So we're just coming up to 20 seconds before that data. I'm going to be looking at dollar yen, euro, and 10-year yields, because you always got to have yields up particularly over inflation reports. And we've got 7 seconds.
5 seconds. Yes.
It's coming in now.
And 2.4, the
Yeah.
CPI and the core, I don't see yet.
Core in line, 2.5 as expected. So the headline is softer. And that's just seen dollar yen fall back through 153. Yields ticking down as well. And there we go. Euro dollar having a little bit of a rally. This is going to be interesting because we've got these big options. So let's see if this move can be sustained for now. The rest of the numbers on the month, CPI came in a little softer, 0.2 versus 0.3 expected. Core, as expected, 0.3%. We've got some earnings data in there as well, which were hotter. Average weekly earnings up 1.9% versus a prior 1.1. Average hourly earnings, these are year on year, 1.2 versus 1.1% prior. So that wage jump might take a little bit of heat out of this drop in inflation. But let's see what happens here. Already undoing some of that. Any thoughts on that data, Stel?
Not really. Marginally softer than expected. No, nothing to add, I'm afraid. Nothing to add. So maybe we're edging towards the trueflation number. Who knows? Metals are going higher. Yeah, and silver up 5% now.
Yeah, gold's having another look at that 5,000 level.
Yeah, makes sense.
Stocks
Yields
are
lower,
up as well.
Yeah.
Well, I've lost it. Where's the old gold gone? There we go. Let's get that back on. All messy. So that's well, it's tapping its head again. This will be the second time it's had a go at the 5,000 level on that. Dollar yen's back above 153. Yeah, decent bounce in stocks. I was looking, I know both of you guys have been looking at this. I've been looking at this level, this support down at 68. We were just nibbling it before the data, and that softer data has given it a kick up. So we might find a bit of renewed support on a dip here. But if we fail in this rally and go through it, then we're probably heading down to these sort of lows and areas down in the 67s. Right, that seems to be passing by. I'll keep an eye on markets. Nick, do you want to take it back and share your last bits and bobs?
Yeah, more than happy to.
Till Blake gets here at least.
Yeah, it would be nice to see. Taking a look at this NQ. Yeah, we'll have to see if that 6,800 holds or not. It's a decent print. All right, so I think I was taking a quick look at NVIDIA here. I did have slight head and shoulders pattern here in NVIDIA. It's gonna have to play out soon. NVIDIA does this often. I'm trying to see where there was the last one. I think there's like a little head and shoulders pattern here at one point, and it breaks and then kind of chops around and then might go. But one of the AI stocks that really caught my attention yesterday was TSM. Uh, this is a really great company in my opinion. They produce a lot of the hardware for the AI semiconductors. Very strange wick, and there wasn't a whole lot of news out on them. They had some decent sales reports, but uh, this looks like some profit taking potentially. And when I take a look at the SOX index, this is one to keep an eye on because semis are so important. When you take a look here, it's in this rising channel. Uh, Fell down and bounced right back up. We'll have to see if this, continues on. But I'd be looking for, yeah, a hold around the 618 here at 7829. I'm always taking a close look at these semiconductor indices. SMH is another good one. So a few random tickers maybe. Hood. I thought that they might have a shot around 70 going into earnings, and they disappointed on earnings. Um, it's really taken a large drop of 53%. I think it's coming back up near a level that it fought to get through. So in between this 58 to 63 level, Also 786 of this large year range. Might not be the worst spot. I think Hood might get in, they're going to increasingly get involved in the sports betting world. I think poly markets and all that. And it's been crazy on X, all the poly market bots running around. But I don't hate this level here in Hood. Uh, Also, Netflix too, large decline. Earnings not bad, but I think what's been happening with these equities as earnings has come out. People are getting really skeptical of the amount that they're spending on AI. They want to see higher revenue, higher other projections, and the amount of spending that they're doing is not equating to what the investors would like. And I think that's why you're seeing a little bit of shaky price action. That's why we've seen some volatility lately in these mags, is really people getting skeptical about how much is being spent on all this AI stuff. Crypto, to wrap it up, uh, Bitcoin still in this bear flag. I don't hate this level in Bitcoin. Um, and I'll show why. Um, when you when you take a look at this from a weekly time frame, and it was really cool to see this trend line actually hold. It took three shots at it, but eventually held true. But the weekly RSI, very interesting reads, and it's showing reads as if it's already gone through a full-on capitulation. So what's been common really in all of crypto's life is it has these very large moves and then it'll decline hard and go sideways for about 3 years, wake back up, and then side down, sideways, back up. Question is, could we get that again? But I will add that a lot of these drops are often around 70%. Right now, it's down, what is it, 50? So, and the other thing too, when you look at these RSI readings on the weekly, is these readings typically come in the middle of, the multi-year sideways moves, and it's hitting it right now. There's increasing exposure in this crypto market, both from retail and institutions. So we saw a very fast recovery in the stock market last year, which was not fully unprecedented, but it was the third fastest recovery in S&P history. Could you see something similar in crypto? I think it's worth the argument, given this RSI reading, given the decline, given how many retail people are interested. I mean, I have a basket of friends who, dollar cost average into these cryptos every single day. They're really into it. And we didn't see that back in 2018, and it wasn't fully around in 2020. I think with the moves of GameStop and Shiba Coin and Dogecoin, people started keeping their eyeballs on it. And, my friends' parents are, who work in investments are texting them, hey, this is a good spot to start loading into crypto long term. There might be a chance that it could hold this. And the reason why I like this level, you have the 618. This is the level that it fought at in 2021 that marked the high, and also the level that it fought from March to November to get through in 2024. So I'm not, f- I'm more optimistic than not at here in Bitcoin. Ethereum, it had this trend line for a while, and this was a great. I was playing this in 2025. Nice descending channel that popped. It's concerning, but as long as it's holding this low here at 1431, I am not as nervous about it. I think it, I don't want to call it, but I think it will hold this. But we'll have to see. 786, keeping a close look. If it can get back above 2400, then you kind of have a tradable low potentially. But outside of Bitcoin and Ethereum, although I'm optimistic on these two, I'm not as optimistic on the others. XRP, really ugly. You can kind of just move this trend line like this. Broke a range or broke a support level that it held for some time. And the thing is with XRP is so many people were buying into it because, oh, it's supposed to be a stable coin. And then they got all this revenue and shifted their business model. But It's definitely not a stable coin. We'll see. I think if you're going to play it, it needs to get back above 175. And then you can try and shoot for a higher level. And the rest of these have just really bled out. Cardano, really bad on its lows of its history. So that's ugly. I'm kind of just keeping a close eye on the big players here in crypto. But yeah, I think that's my 2 cents. I think that's it. Um,
Thank you very much,
hopefully
mate.
Friday brings some interesting price action for us.
Yeah, good stuff, mate. Good stuff. Always good to get your thoughts. And here's Blake.
Hey, I was going to say good morning, guys. Nick, you got a request from Ingmar, asked if you could take a look at DHL really fast.
Yes, absolutely. All right, so
And TGIF, everyone.
yeah. All
Thank
right, let's
God.
take a quick look. So this is from 2023, so it's made a nice breakout here. Let me change the coloring on this. It's made a nice move out of here. Let's take a quick look at if it's getting near any fibs. So it's right up near the 618. So I'm not sure if you're in this yet, but if you're long, you want to see this 45.75 level held. Did a nice job getting out of it. Yeah, it's at the 618, but if you are playing this to the long side, maybe, or want to, maybe try and reload on a back test of the support and hopefully maybe ride a move up towards 54. Now, if you're looking to get short, play the opposite. Wait for it to get back below, that 45. This is not financial advice. 45.95, and yeah, this is going to give a nice potential stop to trade off of and see if it can get back into here. That's how I'd probably be looking at DHL. Yeah, it moved. Got some nice movement. RSI on the weekly here is over bought, but this is one of those that could become more overbought, I think. From a smaller time frame, 2 hour, yeah, pretty much same view. Let me see if there's anything quickly. Uh, maybe there's some type of rising wedge that it just had a throw over in. Um, yeah, I still think the beginning portion stands true. You want to see these hold if you're going to get long, play a bounce potentially to the 786 or reverse short and get back into this range. Yeah. Are there
Nice.
any other tickets? Yeah, no problem.
Well, hey, by the way, I wanted to pop in this morning and say good morning and see how everybody fared. So, what's your takeaway from today's data, Ryan? We got weaker CPI, but and markets are liking it. You just made some comments in the chat room that I think are pretty important. But what are your thoughts here?
Yeah, it's a bit of a strange reaction. You might have expected the dollar to soften a bit more, but it hasn't. Yields are the watch at the moment. They're breaking down, or were breaking down through 4.9%, which is sort of the midpoint between the 420, 390 range. Yeah, I think you've got to watch it. I mean, I was actually looking. I was saying in the chat room, I was looking at maybe hitting a pop in euro dollar if it got up to 119 to fade into the expiries, because we've got those big expiries, but that's staying glued there already. Dollar yen's, it's ticking up again. It's another one of those mixed ones. You don't know what to look at. Aussie dollar, that's tracking it up a bit. It's one of those moments where you think it should be doing more, the dollar, in terms of selling off, but it's not. So you just got to be a bit careful with this at the moment.
Yeah, well, what we're seeing is we're seeing a little bit of, I mean, obviously stocks are bouncing. If you were bearish going into yesterday and you saw equities coming down, you're now faced with the holy shit, it's a Friday. I'm gonna have to cover my shorts. They're buying the dip again. And now you're seeing an outperformance of the Aussie dollar over the euro, which is it is sympathetic to a risk on type of move. So, and you're seeing the Mexican peso strengthen, you're seeing the rand strengthen. These are all just symptoms of a market that's very bullish. And so, you have an idea where the Fed is going to, now the market's starting to price in, 3 rate cuts this year, right, Ryan? I mean, now you got stocks that are moving higher and the Aussie's outperforming and the yen is starting to weaken after having a really, really strong week. I mean, this is all telling us that Friday is probably going to be a bit of a recovery day.
Yeah, could well be. Could well be. The stocks are going to be interesting. S&P's down at that 68 level. As I mentioned before we came on, it was nudging around there before the data, and it's rallied since. But if it can't hold this rally, I think there's a bit of a risk that we go through that 68 level and head a bit lower.
Yeah. All right. Well, I don't know. I don't know what to do with this other than, I guess if I was short equities, I'd be a little worried. I'd be like, damn it. We're not getting, if we would have come in with some hot data, it would be a different story. We'd probably be looking at, 6,700 in the S&P or 6,750. But today it kind of looks like we might drift up towards 6,900 by the end of the session. And that's not going to do anybody any favors that are trying to trade outside of a big range that we have in the S&P right now. So anyway, Janet just asked, how can we connect with Nick? Was a great guest. Would love to hear more. Well, you should listen to the week ahead videos because Nick he has a segment on the week ahead videos. You should also visit him in our chat room because he's in our chat room every day. And he also is building Pelican AI. So make sure you check out what he's doing over there. So all really good stuff.
We'll be filming here shortly.
Yeah.
I might wait a little bit to see if we can get some more context out of that data. But yeah, looking forward to filming.
Yeah. All right. Well, if you guys don't have anything else, I think we're going to have to get prepared for the morning edge, which is for the Forex Analytix community. I've got to film that or start that stream in about 30 minutes. You guys have anything else for us for the end of the week, Ryan?
I'm just going to say we had one comment about data flash. It does look like it might be frozen, so I've got in contact with our devs about that.
Okay. Well, hey, speaking of inflation, next week we do have PCE at the end of the week. That's something that people are going to be paying really close attention to based on this inflation read that we got today. People are going to want to see the PCE coming down this next week. So expectations are going to be elevated for a weaker PCE number because that's the Fed's preferred inflation gauge. So that's going to be a big mover next week. Just FYI, we also have like Aussie employment. We have the RBNZ is going to make a decision on interest rates. We've got Canadian CPI next week. So we got a lot of stuff coming. And then on top of that, we're going to have a bunch of earnings too. So
and it's a holiday, US holiday on Monday.
It is a U.S. holiday on Monday, but I know you guys in Europe are celebrating that day, right?
No.
I'm just kidding. No
But
one
also
knows.
We don't get 1,000 holidays like you lot.
Can't forget flowers. Can't forget flowers on Saturday.
Yes, and it is Valentine's Day. Nick knows because he's got a new girlfriend. So Nick's very well aware of the persecution. And then those of us that have been married more than 2 decades, we know we also get persecuted if we don't remember Valentine's Day. So yes, Valentine's Day is a big day for everybody, men and women alike. So anyway, well, guys, I want to say have a great weekend. Be on the lookout for the week ahead video. Nick's filming. I'll be filming that in the next hour or so. And make sure you catch Ryan on the Flow Show on Monday. I don't think we will be having a F.A.C.E show, but we'll have all the rest of the shows on Monday. But
we also might have another shutdown to deal with.
Oh, you know what? Maybe I will have to have a F.A.C.E show. You guys, look, who am I kidding? We may be on holiday, but most people, but as a trader, I'll be sitting here on Monday, so probably we'll have a F.A.C.E show. So just be ready for that. I might be by myself, but whatever.
Life of Forex, right?
The life of a currency trader. That's right. All right, guys. Well, have a great one, and thanks everybody for being with us all week. Next week we have a couple of good interviews coming on too. So we have Dale Briscoe is going to be in the house. So and I think we have a couple others. I think the Vixologist is coming in next week. So anyway, some good interviews next week. And you guys have a great weekend. And thanks everybody for supporting us and being with us each and every day.
Thanks, everybody. Hope you
Cheers,
all have a
everyone.
great weekend.
And I see your comment, Michael. I see your comment about my holiday time.
Yeah, you take it to him, Michael, Mr. W. All right. See you guys.